So, hello, good day. So this is me. I want to try to explain all what we do in Traders Tribe in this short video. So, for starters, when you come to your chart, you look at your the daily. Okay, where you are in the grand scheme of things. What is the trend, and what are your indicators telling you? So, for example, for today, coming in at today being the 31st of March 2020, from the moving average, we saw that we are above it. So, chances that we're looking for price to continue the rise up, unless it suggests otherwise. Then, coming down at looking at our stochastics, we had a cross here, of which price is just there is still potential for the up move. Okay, then so from the daily we saw that okay, when an up move, of which it was showing some signs of weakness here, here, and here. And we saw 3 days of weakness. So we could expect a drop to some extent. Then on the 4 hour, what we had was this long, this not so long, but this inefficient move here. Inefficient move to the tune of about 600 points, 600 pips. So chances are this inefficient move on this time frame will fill up at some time in the future. Moreover, you could see that we're in an uptrend and price is above the, because as of the time price was above the moving average. So we could wait for a bounce and maybe buy the change in order flow. So on the 4 hour, price was also above, so we could be looking for buys. Then going down further, sorry, one more thing on the 4 hour, looking at the stochastics on the 4 hour, we saw the price was diverging here. Now, one thing you need to understand is that after an inefficient move such as this, the indicator down here will most likely be diverging when price is going up. So if you're interested in selling boom, you would not want to enter immediately, or like I told you guys, with trading divergences. Once you see the divergence, it depends. You might enter at the point, you might not enter at the point. If you are seeing weakness on the lower time frame, you can enter and hold and see if it will play out. And moreover, this is the 4 hour chart, so this is going to take a longer time to play out. But nonetheless, the best way to trade divergence is to wait for order flow to change and you enter at that level. I think I've been explaining what order flow is, but I will try and go a little bit detailed in this video. So from here we can move down to say the 1 hour charts. On the 1 hour charts now, we're getting into intraday reality. You know, the day was 31st. That's so starting today here. So we started the day. If you were interested in trading to the long side, we had this was the low, the previous day's low. That was the low of yesterday. And you know, our system will mark the low and the high of the previous day. That's the highest point of the previous day and the lowest point of the previous day. Those are 2 points, we mark them. Then we also mark the open of today. So the price at which price opened for the day. So it's simple. The assumption is simple. If we are above the open of the day, the bulls are in control. If we are below, the bears are in control. Bulls being that chances that we're going higher, bears means chances that we're going lower. So at the start of the day, with our system, there are 3 levels we buy outrightly. if we're above the open, as like here, when price comes back to the open, we want to buy in anticipation of the price moving higher. If we're talking of a sell, maybe we are below the open. So when price goes back to the open, we're looking at selling the open. Then the low, we buy the previous day's low and we sell the previous day's high. So at this point, it worked out. That was quite early, the early hours of today. So it worked out fine for at least 100 points. Then price spiked above the high of the day. And let's go. I don't really trade off the 1 hour. It's basically 30 minutes and possibly the 4 hour and 50 minutes. So now looking at our stochastics down here, so this was the highest point at this point, and we saw price spiking to that point also. Well, it didn't. We could say it passed, but price didn't get there. It's questionable. It's questionable. The stochastic did not really give us anything. Then the moving average here, as of here, the moving average was above, and the moving average worked out fine. Price came back to the moving average and reacted. No, so now let's look at the 30 minutes time frame. So now we're getting into the intraday reality. So price spiked off this point. So now what I want to explain to you guys is how to enter using order flow. So now we have there. So now here at this point here, the order flow changed. At this point, that was the first order flow change to the upside. At this point, you could see the candlestick formation at the lows. So if you were scared of taking a trade at the lows, say maybe you wait. This was an engulfing candle, followed by a doji. I think this is not a doji. This is an inverted hammer here. So with a clear rejection of the lows, so that's like a buy signal. But nonetheless, you didn't take. Let's say you didn't take the trade at that point. So order flow changed here. Then price went up to this point here, and it started to drop. It started to retrace to this point, and it started to retrace. So as it was retracing now, your major concern are two things. We are above the moving average. As our system suggests, we are above the moving average. So we want to keep buying order flow change to the upside. Now, since we are above the moving average here, at this point we are closed above. So wait, price came back. We'll say when we get back to the moving average, we should buy. Of which it worked out fine here. But now, looking at this, we came back up to the open. We're looking for this order flow here to break to the upside, so we can maybe hold the trade for a potential of a more upward move, or maybe an advancement. But price didn't do that. Instead, we stalled at the open, stalled for another 30 minutes, and we dropped. Now, this level here is our current level of order flow, right? That's the current level. So now price closes below this level here. Now order flow has changed to the downside. So as for this, we are not concerned with either buying, or we are not concerned with buying. As order flow broke here, ideally we should be looking at selling possibly to where? To the beginning of this up move here, which is down around here. Price also came back, then closed and continued to go down, all the while we are below the moving average. So since we are below the moving average, well, sometimes you can trade the change in order flow below the moving average. But we progress. As the day progressed, we saw price come here and we moved higher here. So we now have a new level here at this point here. So now once we close above this point, of which we did here. Once we close above this point, this black point here, this last level of order flow. Now, once we close, that's where price started to come down from. Once we close above here, chances are we are going higher. So you can take a buy when price comes back to this level. Or the way I do it is that I set a buy limit. A buy limit, that's what you set. A buy limit is that price is below where market is, where your entry order is below where market is. So I set a buy limit at that black line, the last change in order flow. So I expect price to come back down to that level for me to end. Then I will enter for it to go higher. So price came back to the level, could have picked my entry, then it didn't go up. There was rejection, and now we had a new level of order flow to the downside at we had a new level of order flow to the downside at this point here, at this point. So we're looking at that point also. So if that point breaks, that means we're going lower. The point to the upside is here, the point to the downside is here, because in order flow, obviously you have where price started to go up and when price started to come down. So we have here and here. So price came back, closed below that level, so chances are we're going down. So the higher. So when when your chart was like this, sorry please, let me get that. When your chart is like this, you don't know what next is going to happen, but all what you can see from your chart is that the order flow here has changed to the downside. So chances are we're going down. So when price came back up here, you could mark this point now as a new level of support or order flow here. That because that's where price started to come back up from. Then you came back here. Now, there's another thing I didn't tell you guys the previous time. Support once broken becomes resistance, and resistance once broken becomes support. This level here before at 9221 or 9224 was a support level. That's where price started to go up from, right? Then as we broke below, we came back, retested the level. We saw this rejection to the upside. So here at this level also of the recent order flow, of which price started to come down from. So price came down. Now if we go below this line, if we close below this line here, that's the last level of order flow. As of the time we're seeing it, that means we're going down. So we did close below, and we went down further. Let me show you crash 500. So I'm trying to see how I can explain how our system works and how we incorporate all these things into it. So at the start of the day, you look at you draw the lowest point of the previous day and the highest point. Personally, as the day progresses, I can delete this line if price is not going to go back there. If I feel price is not going to go back there, but there are some days you'll be shocked how the price will behave. So I mark the low of the day, of the previous day, the high of the previous day. So now looking at this for crash, like I said, we'll only take sell trades on crash. So now let's look at it from the daily. So let's see how you do your analysis from the daily. Now looking at the daily, we are above the moving average first. Okay, that's a sign that at least we're in an uptrend. And secondly, the stochastics were heading into what people presume as oversold territory, overbought territory. So we could be expecting a retracement. Well, that we don't look at our stochastics like that, but all we're seeing on the stochastic from the daily chart is that okay, we're in an uptrend. End of discussion. Just look at it. Okay, we're in an uptrend. Where are we in relation to where the previous highs and previous lows? This was the previous low. This point now is already higher than this one, so we can say okay, here we agree But this point here is higher than this point. This point here is higher than this point. But on the stochastics, this our current point as of the when the day began is higher. So that's like an hidden divergence. So let me see if I can draw it. If I can draw the point, I think yeah, this is it. So this is it. So as of when the day starts, price. Please a minute or second. So price. This was it. Price was going down. The stochastics was coming up. That's hidden divergence. So we could know that okay, we could expect some down move from here. Then looking at the candle pattern we saw a long rejection week to the downside, about 200 points. So this is telling us a tale coming into the new day that we could expect a major down move coming into the new day. So that is from the daily charts. From the 4-hour, I'm trying to explain to show you guys how I do my analysis from the 4-hour. So from a typical day. So from the 4-hour, we see that okay, we're in an uptrend. We're above the moving average. Although this, we can't say this was an inefficient uptrend. At least it was partially efficient, then partially inefficient. As of here, we have an exposed leg here that might fill at a later date. Then above here, some relative balance here partially, then partially before we saw the drop on before we saw the drop yesterday. So now looking at the chart now, from here what we could draw was that okay, we were, because this was the point, this was the beginning of the day here. At this point here, that was the beginning of the day. So that okay, the moving average were close to the moving average on the 4-hour, of which we could expect a bounce from the moving average. Then secondly, the stochastic has crossed. So on the 1-hour, we're below the moving average. So our system says if we're below the moving average, we want to sell order flow change to the downside. If we're above the moving average, we want to sell order flow change. We want to buy order flow change to the upside. So here, as of the start of the day, we're below the moving average. So we're looking at order flow change to the downside. We're looking at selling order flow change to the downside. So now let's look at how they panned out. On the 30 minutes time frame, we're here. Now look at the stochastics. You see, at this point we were in presumably what people call oversold territory, but surprisingly you can see the drop that happened, over 200 points drop that happened. Now we're supposed to be in an area where we could be expecting a buy. So that's why I told you guys we don't buy because we're never oversold or overbought. So now let's look at this. So let's just pretend that we started the day here at this point. So the moving average across, the stochastics are also crossed. Well, we're looking at our levels. So we draw the levels as we progress. So we have that level marked. This level was the last level of support, of resistance, of support that broke, that is going to be it's most likely going to be resistance when price gets back there. So let's see how it went. That was our level. Price started to come down. This was our last support level that broke, that is most likely going to be resistance, and this is also resistance at the top. So price came to that level. We saw a reaction. Ideally I will sell at this level. I'll put a sell limit at this level here, the price at which the point at which price broke this support. So I put a sell limit here with my stop, my 30 pip stop above the last point, above the last support or resistance. So price came, touched, spiked down, spiked to, this was rejection. We had this rejection, we had another rejection the next 30 minutes. Then we saw price go up, saw price come down, the massive engulfing candle, blah. So now we could say, okay, from here, although sometimes, like I told you earlier, sometimes price do respect the previous support and resistance level it has established during early during the day. But what you should be most concerned with is what's the current one. So price came here, it didn't break, then it broke the next candle. So you could say, okay, ideally you want to enter here with a stop above the last level, which is here. Honestly, for this I think you would have been stopped out for a loss of 30 pips realistically, because personally I would want to enter at this point here. But another thing that will make me be skeptical about this trade is that the open is here and price has already rejected the open at this point. So I'll be thinking maybe not. Then price came above to this level here. This level here was the last level of order flow. This was where price started to come down from. Then price came above, came there, and we had this hammer, this inverted hammer at that point. This is an inverted hammer at that point. Now there are three things going on for that point. That point was a resistance level earlier, a order flow level, another flow level, then it was also on the moving average. So there were three things going on. So that was like a clear sell signal. You can enter there with a 30 pip stop and possibly a 60 pip profit. But with crash and boom, you could expect the profit margin to be a lot larger. So as price came back here, you had the loss here, or let's just say you had the loss. Then price came back up here. We had this inverted hammer at another flow level and a previous resistance level, and it's also the moving average. So price came down. We broke. Now this will be our new level of order flow. This will be our new level of order flow. We broke that level. So we say, okay, if you are not in already, this was a chance for you to get in. Once we broke this level, you could put your sell limit at this level, this black line. That when price gets back up there, you want to enter a sell. Of which price came back up, it didn't go higher, it didn't close higher, it closed below, and we went on further, closing below, breaking breaking all levels of support. So price came down to this level. This last black line I drew, this black line here, came down to this level. We came back up. So now if you're not already in this trade, or maybe you're considering a buy, what you should be considering is that, okay, are we changing order flow to the upside, or are we changing, or is the order flow continuing to change to the downside? So here we saw that price broke this last level of order support here and order flow. So we could place our entry at this point. That's 103.29 with a stop above this last level here. Wow, this one is quite big, 47. But let's just say, for the sake of illustration, you did take the trade. So that one also came back up, came down here, broke, continued to go lower until we got to this point. And we saw price change here. So here we saw this was the rejection week, a rejection candle. Price came back, rejected also here. Then we saw this massive engulfing candle. This is, well, you could arguably say this is a morning star here at this point here. These three candles, surprise, go down, then price engulf the last candle. Almost it also engulfed the previous two candles. So that's a sign of order flow changing, even though it does not come back to retest that level. So that's just a sign. So that price just came back up, then to this level. This was the level price started to come down from. Price came down, and mind you, this was also the last level of order flow on this side here. So that was when price started to come down from. Then price came down here, came down back here. So now if you were not already in a sell trade, what you'll be waiting for is that for this order flow here to change. Once price closes below this black line, you can put your sell limit at this black line for it to continue to sell further. I hope you guys understand what I'm saying. I'm trying to explain how we use what we get from the higher time frames down. So for crash 1000, I'm not going to go over that again. You check the daily chart where you are. Are you above or below the moving average? You check your stochastics on the daily. What are you seeing? Check the candle pattern on the daily. What are you seeing? Then when you move, you scale down back 4 hour, 1 hour, then down to the 30 minutes. On the 30 minutes time frame, you draw your three lines, the previous day's high and the previous day's low. Then you draw the current day's open. That's the point at which price of this trading started on the current day. So that's what we do. So now let's look at crash 1000. So we have just a minute. Let me get this together. So price come down. Let's say for whatever reason you woke up and this was what you saw. This was the chart you saw. Okay, you could say, okay, this was our last level of support. That's the order flow support. Then up here we had another level. So we waited. Our system says when we get back to the moving average, you sell. So if for whatever reason you didn't sell at the moving average, you're waiting for the order flow to change to the downside. Now you're waiting for that line, for the price to close below that line. If price closes below that line, you set a sell limit on that black line. That present price comes back there with a stop above here. And when price waits to stop above the last level of order flow, once price gets there, you should continue down. Now let's see. Well, this happens a lot of times. Price doesn't come back to retest that level, and we just went on going down. Now if you look at this level here, there's a 23 point difference between where your entry, your ideal entry point should be, and here. Now it's now left for you to make the judgment call, because we trade in every day is a judgment call. There's always judgment call. Even though I tell you that you should buy now, we might not enter at the same price. So you might be thinking, okay, price might come back up to give you that entry, of which most times it does not, especially when it's in this kind of a trending market. So price didn't come back, so we'll be waiting for order flow change to the downside, or candlestick patterns that suggest price will go down further. So that passed. Then if you were not in already, you could wait till when price breaks another level here. So price started to come up here. We came back up here. Then we saw this engulfing candle. This is a massive engulfing candle at this point. So one could easily say, okay, I can enter here without order flow, without the change in order flow, because from here, from this point now to this last level is about also 20 points. So it's left for you, because your stop loss is supposed to be above the last level. So when you do the math and you see how and where your stop loss will be and what effect it will have on your account, then you can choose not to, or whether to take the trade. So price came back down. We were expecting price to come back up at this point and sell, but it didn't. Instead, price bottomed out at this point here. So a mini divergence too, as I was telling you guys, a mini divergence down here. So we saw this point here. That was our this point here was our order flow level to the upside. So if that breaks to the upside, chances are we're going higher. And also I will have our last level, our next level of resistance at this point here. So price came back, broke that level. So we're now, the order flow has changed to the upside. So if we're thinking of getting short, it would have been at this point here. And moreover, that point is also on the moving average 1 2. That point was the previous level of resistance, and price came and we formed this inverted hammer also at that point. So we could expect price to drop. Price did drop, although it was not so significant, but it dropped at least 30 points. You could have gotten 30 points out of that. Then price came back up to that level, retested the level for the second time, and now it dropped further down back to this, past this level of order flow here, this level, because like I told you guys, the order flow level changes as the day progresses. So it passed this level. So when if you're not already in a trade, you could put a sell limit here at this black line, that when price gets back there, you should sell. Of which price did get back there, sold one, sold the next candle, but price did not really close below this last level of order flow here. So that should be like a sign or a warning sign that we might not be going any lower anytime soon. So basically that is it. Let me just do a brief rundown. At the beginning of the day, you look at your daily, your 4 hour, your 1 hour, to know where you are in the grand scheme of things. Are you above the moving average or you are below the moving average? Okay, what is the stochastic telling you? Are we seeing a regular divergence or a hidden divergence? 2. Then thirdly, you draw your lines. The previous day's high, the previous day's open, and the previous day's low. Then you trade the change in order flow to any side. So if you're selling, you want to change the order flow, you want to trade the change in order flow to the downside. If you are buying, you want to trade the order flow change to the upside. As simple as that. All right, thank you very much, guys. I hope this helped you guys. Have a nice week.